All right, let's dive into the big changes happening over at Equinox India Developments Limited. The company formerly known as India Bulls Real Estate Limited. This company is really like reinventing itself right in front of us. We've got a brand new regulatory filing here. It's got all the details on their latest quarterly results and a pretty major merger approval, too. Plus, we'll be looking at an independent auditor's review of those same financials. Oh, and we've got an investor update, too. It gives us a little peek at some pretty ambitious plans, so.
Yeah, this isn't just some surface level makeover, it's a full-on transformation. New name, new leadership, a whole new outlook on the future, really. What I find really interesting is that this whole reinvention seems to be sparked by this big merger.
Okay, so let's break this merger down a bit. The National Company Law Appellate Tribunal, the NCLAT, right, just gave the green light to the merger between Equinox India Developments and two parts of the Embassy Group, NAM Estates and Embassy One. So in plain English, what's going on here?
Basically, it's a change in who owns the company. Think of it like Equinox is teaming up with the Embassy Group, and that's leading to this whole rebranding thing as Embassy Developments Limited. And this isn't just some small-time deal, it's a major move. Gives them a foothold in that booming South Indian market, specifically Bengaluru. They're also aiming to diversify their portfolio, have a good mix of commercial and residential properties.
So not putting all their eggs in one basket, so to speak.
Right. Diversification's key, especially in a market like Indian real estate. This way, they can spread the risk and tap into different parts of the market. Plus, you can see the ambition here. They're definitely making a play to be one of the top players in Indian real estate.
Well, speaking of ambition, the company's executive director, Sachin Shah, seems pretty pumped about this merger. He's confident it'll create a ton of value for stakeholders. But is that optimism reflected in the numbers? What's the state of their financials?
Well, their latest quarterly results, the ones for the quarter ending December 31st, 2024, those paint a pretty rosy picture. Revenue's up 8% compared to the last quarter. And get this, year over year, their revenue has shot up by, wait for it, a whopping 176%.
Wow, that's a huge jump. What's driving this incredible growth?
The merger is definitely a factor. It's brought in new assets and revenue streams. But we got to look at the bigger picture, too. The Indian real estate sector has been doing really well. And Equinox, or Embassy Developments, as it'll be known soon, seems like they're riding that wave. But here's where it gets even more interesting. Their adjusted EBITDA has gone positive. Now, for those not familiar with this financial stuff, EBITDA means earnings before interest, taxes, depreciation, and amortization. Basically, it tells us how profitable a company's operations are.
So they're actually making money from their core business? That's huge, right?
Absolutely. It's a sign they're not just hanging on, they're thriving. And there's more good news. Their adjusted profit after tax, or PAT, is also positive. This means they're not just bringing in revenue, they're actually making a profit after all the expenses are taken care of.
That's pretty impressive. It seems like this merger has really put them on solid financial ground.
Yeah, and their pre-sales and collections have also been strong. And their debt situation is pretty healthy. They've got a low debt-to-equity ratio, meaning that they haven't borrowed too much. And their average cost of borrowing is manageable.
So if we got a company going through a massive makeover driven by this strategic merger, their financials look great. And they're clearly aiming high. But what about the actual work they're doing? What are they doing on the ground to reach these goals?
Yeah, that's where those operational highlights come in. And it's not just about boardroom strategies. They're actually out there building some really impressive projects.
Okay, so let's get into the nitty-gritty. Their investor update really breaks down their performance, especially this last quarter. Where should we start?
Well, their Skyforce project in Lower Peril, that's a great example. They managed to sell 13,000 square feet of space there at an average price of 19,331 per square foot. That translates to about 26 crore in pre-sales and 38 crore in collections just for that one project.
Okay, hold on, just so I'm clear. When we talk about pre-sales, we're talking about those agreements to buy even before construction's finished, right?
Right.
And collections, that's the actual cash they've got.
You got it. Pre-sales show us future revenue. Collections are the money they have right now to actually, build these big projects.
Gotcha, that makes sense.
Yeah.
So Skyforce is doing well. What are their other projects? Are they seeing the same kind of success?
Oh, yeah, definitely. Like their India Bulls Greens project in Panvel, another solid performer, they sold 16,000 square feet there at an average of 5,843 per square foot. That brought in 10 crore in pre-sales and another 10 crore in collections. And then there's Embassy 11 India Bulls in Thane. They sold a whopping 35,000 square feet there at 11,476 per square foot.
Wow, those are some serious numbers. Sounds like they're really firing on all cylinders.
They are. And it's not just about the size of these projects, it's also about how quickly they're getting things done. That's what they call velocity in their update.
Right, I was curious about that whole velocity thing. Can you tell us more about what they mean by that?
Sure, velocity in this context. It basically means they're moving super fast, both operationally and financially. It's all about speed, in their pre-sales, collections, construction spending, and also in how their revenue, EBITDA, and PAT are growing. It's like they've hit the gas and they're not letting up.
Makes sense. Speed's essential in a competitive market like real estate. The faster they finish a project, the sooner they can generate revenue and move on to the next one.
Exactly.
So they're doing great with their current projects, but they're not stopping there. They've got this whole pipeline of new launches, and it's creating quite a buzz.
Oh, yeah, and they're not just sticking to what they know. They're branching out into new areas and segments. For example, in Bengaluru, they've got this high-rise premium project planned in Whitefield. It's a joint venture, estimated to be worth a massive 430 crore. They're planning to launch it this year.
That's a bold move, going into a new market like Bengaluru. But remember, this merger with the Embassy Group gives them a big advantage there.
Right, they're using the Embassy Group's network and experience to make a big splash in South India. And that's not all. They've also got another high-rise premium project in Thane, Mumbai. This one they fully own. It's estimated at 635 crore, and it's already launched.
It's like they're playing real-life Monopoly, just snatching up properties left and right.
Uh-huh. Well put. They are strategically expanding their footprint. And what's interesting is they're moving into new segments, too. Take their project in North Bengaluru. It's going to have plotted developments and villas targeting the ultra-luxury segment.
So instead of just apartments, they're offering individual plots of land for people to build their own dream homes.
Exactly. And they're focusing the high-end market, people who want that exclusivity and customization. It's a smart move considering the growing demand for luxury living.
And we can't forget about Alibag. They're launching a low-rise premium project there. Tapping into that demand for second homes and vacation properties, Alibag's become quite the hotspot lately.
It has. It's just a quick ferry ride from Mumbai, offers a nice, peaceful escape from the city. And then there's Worli, one of Mumbai's most prestigious areas. They're planning a high-rise, ultra-luxury development there. Estimated value of over 8,000 crore. That's huge.
Okay, let's take a step back for a second. They've got all these ambitious projects in the works.
Right.
But can they actually deliver? What makes them so confident?
Well, one word. Land. Their extensive land bank. That's their secret weapon. They have a massive 3,227 acres of land reserves, more than any other listed real estate player in India. It's like having a treasure chest full of potential.
That's an incredible asset. Gives them a huge edge.
Right, it puts them in control. They don't have to rely on buying land from others, which can be expensive and time-consuming. Plus, their land is strategically located near major cities, so they're in a prime position to capitalize on future demand. They've got 2,515 acres in the west, 534 in the north, and 178 in the south. That geographic spread helps reduce risk and lets them cater to a wider range of buyers.
So they've got the land, the projects, the financials, and that velocity to get things done. But
Yeah.
what about their debt? Their gross debt is sitting at 420 crores. Is that a concern?
Well, it's always wise to keep an eye on debt, but in their case, it doesn't seem like a major red flag. They've got 116 crore in cash and cash equivalents. So that brings their net debt down to 304 crore. Plus, their debt-to-equity ratio is really low, only 0.09x.
Wait, hold on. What does that debt-to-equity ratio actually mean?
It basically tells you how much debt a company's using, compared to the equity they have. A lower ratio is generally better. It means they're not relying too heavily on borrowed money. In their case, this low ratio suggests they're managing their debt well.
Okay, so their debt situation seems to be under control, and their average cost of borrowing is 13.2%, which isn't too bad considering the current interest rates.
Yeah, they're definitely being smart about their debt, maintaining a healthy balance sheet. They're not just spending wildly, they're strategic about how they use debt to fuel their growth.
It sounds like they've got a good handle on their finances. But, the real estate market can be a bit unpredictable. It could be affected by things like interest rates, government policies, even the overall economy. Are there any risks or challenges on the horizon for them, even with all these advantages?
Oh, absolutely. It's like they're sailing smoothly right now, but you never know what's lurking around the corner.
Yeah, what are some things that could, rock the boat for them, even with all these advantages we've talked about?
Well, the Indian real estate market, it's kind of like navigating a crowded market, full of energy and opportunity, but there are definitely going to be some bumps along the way. One challenge they'll have to tackle is integrating those embassy group entities, merging two big companies like that with their own ways of doing things. It can be tricky, you know?
Yeah, it's not just about signing the papers. It's got to be a smooth transition, making sure those two pieces fit together and work better as one.
Exactly. Got to keep that talent, build a unified company culture. And of course, there's always the chance the market could take a dip. Interest rates going up, government policies changing, a slowdown in the economy. Those could all hit the real estate sector pretty hard.
True, you just never know what's going to happen next. But from what we've seen, they seem to be approaching things with a mix of ambition and caution. Their diverse portfolio, focus on execution, and that massive land bank. It all suggests they're pretty well equipped to handle any storms that come their way.
I'd agree with that. They're not putting all their eggs in one basket, so to speak, spreading their bets across different segments, different areas, different types of projects even. That kind of diversification should help minimize some of the risks that come with real estate. But they're not just reacting to the market, they're trying to anticipate it, shape it.
Yeah.
That move into plotted developments and villas, for instance, it shows they're recognizing how buyer preferences are changing.
That's a good point. It's not enough to just build anything. You got to build what people actually want.
Yeah.
And more people are looking for an experience, a lifestyle.
Exactly, and that's where their focus on the premium and luxury segments comes in. They're not just building houses, they're creating communities, lifestyle destinations,
Right.
tapping into that desire for a better, more luxurious life. But they're also aware of the growing demand for sustainability. More and more buyers want homes that are eco-friendly and energy efficient.
And are they addressing that in their projects?
Oh yeah, they're incorporating green building tech, sustainable materials, energy-efficient designs, aiming for those certifications like ALEE and IGBC, the recognized standards for green buildings.
So they're not just building for now, they're building for the future. Thinking about the environmental impact,
Exactly.
creating spaces that are sustainable in the long run.
It's not just a trend anymore, it's essential. Sustainable building practices are good for everyone. The environment, the people living there, even the company's image. It's a win-win all around. But, buildings are only as good as the people behind them. What about their leadership team? Can they steer the ship?
Well, their leadership team seems pretty solid. They've got a good mix of experienced folks and fresh faces. Sachin Shah, the executive director, he's got a pretty impressive track record working at Embassy REIT and Blackstone. And the other team members bring a lot of different expertise to the table.
Yeah, it's a well-rounded team with a shared vision. They've got a proven track record of handling complex projects and navigating those tricky market conditions. And we can't forget about the power of the Embassy brand. Embassy Group is a big name in Indian real estate, known for their high-quality developments and customer focus.
It's a huge advantage. In real estate, your reputation is everything. It's about trust, reliability, proving you can deliver. This merger gives Equinox instant access to that brand recognition.
Absolutely. It's like a stamp of approval from a trusted source. Buyers are more likely to invest in a project from a developer with a solid track record.
All right, so let's wrap this up. Equinox India Developments, soon to be Embassy Developments, they're at a really interesting point in their journey. A total transformation driven by the strategic merger. Strong financial performance and a bold vision for what's next. They've got a lot going for them. A great leadership team, tons of projects in the pipeline, that huge land bank, and a commitment to sustainability. But they've also got challenges ahead. Integrating those embassy entities, dealing with market ups and downs, staying ahead of the competition.
It's a classic story,
Yeah.
Ambition, transformation, striving for excellence. They're aiming to reshape the Indian real estate landscape, using strategic thinking, calculated risks, and a laser focus on getting things done.
It's definitely a story worth following. What are some things our listeners should keep an eye on as things develop?
Well, keep an eye on how well they integrate with the Embassy Group. Create that unified, high-performing team. Also, watch their progress on those ambitious projects, especially their move into new markets and those new segments. And finally, see how they adapt to the changing real estate market. And stay ahead of those new trends and technologies that are always popping up.
It's an exciting time to be following this company. They're playing a high-stakes game in a market that's always evolving. Their success will depend on their ability to execute their plans, adapt to change, and ultimately keep their promises. It's a story of reinvention, ambition, and aiming for something bigger. Only time will tell if they can reach those goals. But one thing's for sure, it's going to be a fascinating ride to watch.